so didn't trade this morning because I was tired from rugby practice last night, to be honest. But I just wanted to get some backtesting in today, since if we're missing days, we may as well backtest. And so just make sure all of my indexes are clear of drawings, and we'll jump out to the 4 hour here, and we'll just backtest. I'll just kind of show you how I backtest, and hopefully we can get something nice out of it. So I did some thinking after yesterday's trading day, so we'll go into these logs and have a look. So yesterday I took 2 trades, which is very against my trading rules. My trading rules clearly, for me, is 1 trade per day. But my reasoning for yesterday for taking 2 trades is, well, I knew I wasn't going to be trading this morning because I wanted to prioritize some sleep and rest. And so I'm going to use today's risk for yesterday's second trade of the day. Now, here's the big problem with that. I mean, luckily, yesterday we got some profits and minimized our loss on the day. However, if we were to lose Wednesday's risk in yesterday's day, what if we were going to trade today? Like this morning, I woke up naturally at 6 a.m. and I should have just got on the markets, right? But instead, I went back to sleep because I was like, no, I'm not trading this morning. I want to go to sleep. But regardless, if I was to trade today after using my risk from yesterday, what if today was a profitable day? What if we banged a trade this morning, right? But we took the 2 trades yesterday and used today's risk yesterday, and so we can't trade this morning because we took 2 losses yesterday, and we got to stay on track. That doesn't, you know what I mean? Like, what if today would have been a good day? And so I'm gonna really buckle down on 1 trade per day. And no matter what opportunities I see after the one that I took, if I end up with a loss, too bad, so sad. Learn from that mistake and then move on. And then, so this morning, didn't trade, obviously. I could have if I wanted to, and I should have just said, you know what, fuck it, I'm going to get up and get on the markets. Which I'm also going to change that. So we're going to stick harder to the 1 trade per day, but I'm also going to change not trading after rugby practices, because, I mean, I got home. I didn't get to bed till about midnight last night. I got home at 10:30, ate some food, had a shower, and then went to sleep. But you know what? If I'm waking up at 6 a.m. routinely, and I woke up naturally at 6 a.m. this morning, I'm getting on the markets. Like, I should be doing that. So anyways, let's have a look at today's price action. So before I even look at it, I really try hard not to look at price action first thing in the morning. Oh, and you know what? We could try and trade PM session right now too. But well, you can backtest PM session as well. I mean, I don't really want to explain my PM session strategy, to be honest with you, but so anyways, we'll just backtest and then we can talk about it after. Holy cow, I'm slow. So we're in replay mode and trading view, and we go back into the morning here. So here's the 5:30 candle. I want to see the 6 to 6:30, so that's this one. Boom. All right, then we go into our 5 minute, and there's market open. Our market open is right here. So back at our 30-minute chart, we're just going to pay attention to what draws and liquidity we have. There's previous day highs up here, Asian highs up here, a long time ago. We got these lows down here. The cool thing about replay mode, I think, which they recently updated, is that you can go between back and forth between your charts, and they're going to stay on the same time. So you can really get good at practicing like getting reps in with, SMTs and stuff like that. So obviously there's a big bearish SMT off of yesterday's price action, right? We have these draws on liquidity up here. Got a big extension up pre-market, sweeping out London highs pre-market. And then, you really don't want to be any more bearish than that. We've come down really, really low. This is the only thing. And so what I would be looking for, I guess those aren't too far out. Mark those out. That's a long time ago, but yeah, those aren't too far out, so we'll mark those out as well. Okay, now we're kind of ready to start our day. And it's not like a normal trading day where you just kind of wait for candles to print, you got to do it yourself. So it's a little bit easier, but it can really show you how price action is moving. So what do we get pre-market? We got this break of structure to the upside on the 5-minute, a 5-minute fair value gap fill, and a liquidity sweep on London highs for both indexes. Very similar price action here. So here's market open. Boom. Really. That's actually very surprising. We did nothing on market open. Sometimes you gotta flip between time frames to get that candle to load in. Okay, so at this point, I guess my bias would be bullish. I don't, these lows I don't think have a purpose. And, we got SMTs here as well. Okay, I didn't know that, or I didn't recognize that. We got an SMT right here, right? Which I think will help us out. So yeah, we're looking pretty bullish. We sweep out these 5-minute lows, continue up, right? Rejecting off these 5-minute lows. Boom. And what time is this at? This is at 6:45 to 6:50. We get this extension upwards, proving some continuation. Now, yes, it's higher than NASDAQ, and these highs are more in range, in my opinion. But NASDAQ has been a little bit more consistent, in my opinion, these days. So after that candle, you can see we're at 649 here. Where do we get this break of structure to the upside? We get a retrace. If we wanted to fill this gap on this retrace, we would have, right? So here's my bullish confluence, is a retrace and a continuation candle, right? And then we get this. We get a little bit of chop. So I'm expecting a little bit of a dip down here. Yeah, I'm expecting like a 1-minute liquidity sweep of some sort relatively soon. Instead, we pump through these highs, right? So now I'm expecting like a wick match type of deal here. We come through. Will we get lower? If we don't, no. Okay, I'm deciding to go in here. So this is my continuation trade. This is it's a bit odd because you wait for that SMT to get like not possible. So I wait for both of these to be above the highs, and then also, I'm expecting 1-minute pullbacks and 1-minute liquidity sweeps. We get this 1-minute fair value gap fill up here, right? And so I'm willing to get in on that, right? I thought we would have got these 1-minute liquidity sweeps down there, but we didn't. We just continued up and we pumped through these highs, which means, for me, that's a strong continuation confluence on top of, a retrace is to be expected. We got this mini-ass retrace and then a fair value gap, right? And then we filled it and got this bullish reaction. So I'm going to throw my stops down at the second and third. Well, these second and third invalidation points are pretty tight together. So I'd rather put it as low as I can, right? And then just up to these highs. 1.6 risk reward ratio. I'm going to adjust it if I wanted to do that, right? But I'm going to leave it here for now. And so let's talk about stop loss placement real quick. For me, I put it at the second invalidation point, usually, but since this is so close together, I may as well put it at the third. So invalidation point number 1 here would be the inversion of this fair value gap, right? And there's stacked fair value gaps here if you actually look. So there's one there. And so invalidation point number 1 is the bottom of this second fair value gap here. That's the official inversion for me. And then second invalidation point is these lows down here. Third invalidation point are these lows down here, which is where we're going to put it. So anyways, I'm moving super slow through this because I want to be meticulous with my entry, with my stop loss. That way when I'm coming into the markets live tomorrow morning and on Friday, I am aware of, my process in terms of putting up a trade is as seamless as possible. So again, being slow and meticulous so that I'm aware of, what exactly where I want my stop losses to be and exactly how I want my trades to look, how I want my entries to look. So this is a typical continuation confluence entry for me, right? You can see super clean 5-minute price action through here. 1-minute price action, a little bit rough. I would have liked to see like a retrace liquidity sweep and then a break of structure to the upside. Again, like a 5-minute pullback off of these highs, would have been ideal, right? But I don't make the markets. I just take the trades that I see. So then, super easy. I mean, how many points are down here? So 93 times 1.5, 139 times. Okay, so 550 divided by 140. So we're gonna get in for 4 here. I miscalculated. All right. Okay, there we go. So boom, that's what we're in for right now. And then, just as we did yesterday, we're gonna chase the stop loss. Right, so now we'll just let this play out. Yeah, and then we'll have like the sell too. We'll dump off contracts per TP. All right, so we've created a 5-minute retrace type of thing here. So I'm willing to chase my stop loss to about below that 5-minute retrace, below that 5-minute fair value gap actually, which is almost right at break even. I don't like that. I want room for liquidity sweep. So boom, that trade would have taken us from 654 to 735. That is an optimal trade right there. Clean price action, easy trend movement, perfect continuation confluence. And so we might have missed out this morning, and that sucks. But you live and you learn, and I'm happy to come back and backtest this type of thing. Because these aren't, no one likes being in a trade for 40 minutes, right? We all wish that we could enter and just have the price teleport to our stop loss or take profit here, but it doesn't, right? So, that's why I tell myself the time, okay, 654 to 735, that's a 40-minute trade, right? it just gives me an idea of like, okay, these are the types of trades that I'm gonna be expecting, right? And so that worked out great for me. ES, as you can see, didn't actually get close, like at all. To its take profits up here. So this is what I mean when NQ is a little more consistent than ES. Right, and ES actually takes out take profit 1, but then I believe that at this point we're kind of chopping up, getting liquidity sweep maybe. But so anyways, not much to really talk about there, right? Mark out your highs and lows. Develop a bias based off of high time frame trend, which is just like, I would call it like immediate trend right here. Coming into the morning at 3 a.m., this 3 a.m. to 7 a.m. candle, we break structure to the upside, right? But more specifically, we got nowhere else to go down here other than these lows. So regardless if we were to manipulate these lows or not, I would be bullish anyways, right? So we would then mark out our highs and lows, then we watch the 5-minute chart, right, until we get a liquidity sweep. We got a liquidity sweep pre-market, which means I'm either looking for hefty manipulation reversal or continuation. And what do we get? The continuation. And then how do we manage the continuation? Well, we can recognize that we're getting bullish reaction out of equilibrium and the fair value gap on this 5-minute move, right? And we recognize the potential for an SMT on these pre-market highs. And so I'm waiting for that 5-minute candle to close above the highs on both charts. And then there's no reason for me to be trading any index over the other. I pick NQ because it seems to be more consistent in my experience, right? So then I'm just looking for 1-minute trend confirmation, right? Is this like a late entry? Yeah, right? I would like to enter down here. I would have entered on this candle, but we're not above these highs yet. There's still 5-minute SMT potential. So I want to wait for a 5-minute candle closure above those highs. Where are we? Above these highs right here before I think about entering. Okay. And then, what do you know? We get this fair value gap fill, ends up being textbook for us, and then we just let it run. So that's just a good session for backtesting on Wednesday. Doesn't take very long. And yeah, I'm really excited for tomorrow. Looking at news, I don't think there's anything pressing tomorrow. Unemployment claims 5:30, and then this PCE price index at 7 a.m. And so we'll just be careful, watching out for that, but I'm not too concerned about it. And then I guess we look at Friday's news. PMI at 6:45, which is 9:45 Eastern Standard Time. I mean, that's not ideal. And so for me, it's just about being more patient, waiting for news to make its move, and then I'll wait for my move. So on Friday, we'll be a little bit more patient. We'll probably get on the charts a little bit later too, like 10 or 15 minutes, after market open, just so I'm not rushing anything. Playing a little bit of mind games with myself. But other than that, thank you guys for sticking around. This has been day 3. Comment, let me know if there's anything I should be doing differently, or that you would do differently, or maybe just some feedback, or if you're just enjoying it. I appreciate your support if you're seeing it. And I'll see you guys for tomorrow morning. Thank you. Thanks for watching.